Hi, it's Helen Tarrant. Hi everyone, welcome to another episode of Commercial Property Roadshow. I'm here with Alan from ZENRG Finance.
Yes, hi everyone.
Hi, and one of the things we're going to talk about today is the difference between commercial loans and residential loans. Now, I've had a few questions on my email and also some comments about what's the major difference in terms of time, cost, I guess effort you need to go through in order to get a residential loan versus a commercial loan, especially for first time investors who are thinking of getting into the commercial space. So Alan, tell us a little bit about the differences. Well, maybe let's run through what is the normal process people go through for residential, and then what's the normal process people go for commercial, and maybe you can then highlight some of the differences.
Well, mainly, firstly, when it comes to residential, first thing, see a broker to get a good product comparison.
Yep.
When it comes to residential, it's about, usually people focus on rates. That's probably the majority. Loan structure is another typical thing. So the broker will need to do some product comparison, make sure they're aware of the fees and charges before going to the transaction. One thing in residential, which or versus commercial, a bit different, is that resi is valuation. Okay. In resi, like most brokers have a thing called upfront valuation when they're purchasing. So basically it's expected of a broker to have that for free, which we do an upfront valuation before purchasing. Comparing to a commercial transaction, there could be a bit higher upfront fees, or the client needs to pay for that before entering that transaction. Yes, have you got questions?
So then if that's the residential space, it means that someone going into residential, they have a lot less fees up front.
Correct, absolutely.
Yeah. And a lot of that is absorbed through the loan process as well.
Yes,
right?
correct.
Things like, what about establishment fees?
Establishment fees, let's go residential.
Yes.
So if we're going with the majors, usually there's a annual package fee that covers everything. So it covers your valuation and establishment fees. And then it's an annual package fee that they pay. Compared to commercial, could be one set fee, anywhere from a few $100s to be thousands, or another way of charging is a percentage of the loan amount that's facilitated.
Okay.
So definitely commercial is a bit more cost. So I suggest, again, speak with a broker to really plan through what are the costs in going into that transaction, and more importantly for us to research the best deal based on your circumstance. Because I'm just running through some jargon. The deal may be some lease stock deal, which there's a lease involved, versus if it's vacant. So we look at different transactions. But I think the key thing with commercial, the key thing is looking at what are the annual fees or line fees. There's a lot of fees involved. So making sure you understand what you're going into. And then the other thing is that guarantees if it's in a corporate structure. Now I won't go into detail. It's probably like talking to us, so we can explain that further.
So in commercial, just to clarify, so when they start out in the process, you obviously gather the facts and details about the client, and then they present you with a property, and let's say this property is $500,000, and let's say it's about $35,000 in net rent, so 7% yield, and so you would go through the process. There'll be a valuation fee.
Yes.
Would there be an establishment fee initially? And the establishment, is it a set amount or is it a percentage?
Percentage, sometimes like 0.6 of the amount, right? Depending on lender.
0.6 or 1%?
Yeah, 1%.
Okay.
Yeah. So
what about, is there any other fees apart from those two major ones?
probably your line servicing fee or monthly fee, depending on the lender.
So that would be same to residential, commercial. They both sort of have a monthly fee or a package fee.
Yeah, but sometimes it could be a bit higher than normal. Your $395 that covers everything.
Okay, all right. So, and then anything else apart from that?
Loan terms is very different. So residential is over 30 years. Most of the commercial average loan term would be 15 years. Okay. Just be mindful when it's commercial with some of the lenders. There could be penalties for early exit because there could be what they call a securitized lender. I won't go into detail now, but it's just basically early repayment fees to be watching out for.
Yeah, absolutely. So there's some fees. So look at your exit fees. So I guess that's part of the service with a broker is that they go through this process with you and explain anything like fees and stuff that's involved.
Yep.
And also I think the big thing is there is the LVR, so what we call loan to valuation ratio. That's different from residential to commercial. So explain a little bit about that.
Sure. In terms of residential, we can go up to 95 or even 98% in terms of the loan to value ratio. But when it comes to commercial, the highest I've seen is probably 80% LVR, but it can drop down to 70, 65. That's the usual depending on the lender requirement.
Okay. And so then when you're talking about in residential going up to so high, at 95, 98%, is that with lender's mortgage insurance?
Absolutely, yeah.
So there's that additional cost for them if we're thinking about that. If they weren't doing lender's mortgage insurance, what would be the average?
The 80%.
And 80%. Okay.
Course,
so there's a bit of variance. And so if you're thinking of residential and you're thinking of commercial, and you're wondering if you can buy commercial and the reason for it, then it's best to talk to someone who is a professional who can give you a comparison of both, but also show you what the outcome is, because in commercial we're goal driven, or we're cash flow driven, or we might be capital growth driven, and you need to work out a scenario. So one of the things I find with my clients is that they want to know what their cash flow positions are. So how much positive cash am I going to get, right? So whether you're going to get 20,000, 10,000, 50,000, and then that flows on to, well, what's the rate? So for me, someone comes to me and says, I want to have $50,000 in passive income. I can't say to them, well, you need to buy $1 million property yielding at 9%, because I don't know what their lending is. So that's where the broker comes in for me. I have to overlay my commercial property strategy over their financial situation in terms of borrowing. Because all of a sudden, if they say, look, you borrow 80%.
Yes.
What's the rate at the moment, roughly, for 80%?
There's some crash hot rates. I mean, given we've been affected by COVID, the banks, major banks, starting from 2.49.
Yeah, well, that's
crazy. Pretty crazy on commercial security, just letting you know. And these are like fixed for 2 years, 3 years, on interest only or principal and interest basis.
Okay. And that's if you're buying then in Sydney and you buy something 6%, you're paying 2.49%. You still are clearing a good margin. So then that helps me to overlay what that would look like. But if you're 65%, then I got to come back and redo the figures, because it means you have to put in more cash.
Correct.
And what's the cost of that opportunity? So all of that are variables. And the first step, I always say, look, speak to your broker. And I will put Alan's details down below. Also a link to his website, so you can check out more information. We're going to do a combined events upcoming as well, so you can find out some more information about that. And reach out to them and find out more information. And really, then I can help you overlay the strategy on top of that. But just as before we finish up, what are some of the tips you want to give someone just starting out, basically looking at a loan and they're sort of confused? They're going, well, resi, commercial, what should they do? I mean, I know about contacting you, but just in terms of if they say, look, I want to do some research on my own, I want to find out what's right.
Well, I think there's limited information when it comes to commercial. When it comes to residential, there's a lot of comparison website out there to give you the rates and features. So I think it is still best to speak to us there, where we can highlight and break down what the process, number one, fees and charges, the other thing. And thirdly, you may be thinking, oh, there's a cost in seeing us. It's actually, we get paid by the lenders. So it's actually free for that advice on the home loan itself. Of course, property go to Helen, but without the financing, sometimes it's a bit hard for clients to execute the outcome that they want, isn't it?
Yeah, absolutely. So, as you know, seek professional advice, because without seeking it, it can be very costly, especially that in the commercial space. A mistake can cost you thousands and thousands and tens of thousands of dollars, and that's what you want to avoid. You want to make sure you get your loan rate right, and the loan term, and the whole process to make sure it's seamless, so that you actually can benefit and really sit back and get that positive cash flow coming in.
Yeah, and one last one is probably structure, which we'll be talking about it in an event that's coming up. We'll be bringing some experts, because if we determine the right structure, then the lending becomes easier, and then also helps you facilitate the property much quicker.
Yeah, absolutely. Until next time, don't forget to subscribe, hit the bell, and we'll see you in the next episode. Bye for now.
Bye.